Well, hi everyone. Thank you for joining us today on our webinar entitled Performing Evaluations and Compliance with USPAP. My name is John Brennan. I am the Director of Appraisal Issues with the Appraisal Foundation. And with me today, we have Wayne Miller, member of the Appraisal Standards Board.
Well, John, it's a pleasure to be with you today to talk about this important topic.
Great. Thank you, Wayne. Note that we have received your questions for those of you that sent questions in advance, and we've attempted to address as many of those as possible during our presentation. And if time permits, at the conclusion of our presentation, we will try to answer a few more. In addition, you will be receiving a copy of this presentation emailed to you after its conclusion. With that, let's get started today and see what it is we're talking about here precisely. And Wayne, the first question we want to ask here is, can I perform an evaluation in compliance with USPAP?
Well, John, I'm happy to tell you, yes, you can. If I didn't say that, it'd be an awful long hour.
It's time to hang it up right now, right? Well, great. Let's go into that in a little bit more detail. Let's see how we're going to address this topic today. First, we're going to discuss what an evaluation is, for those of you that may not be familiar with them. We're going to talk about when they can be used. We're going to talk about, before we talk about who can perform evaluations, we're going to talk about who can perform appraisals. Then we're going to get into who can perform evaluations. Likewise, we're going to talk about what's required for appraisals, and again, then get into what is required for evaluations. The next topic we're going to talk about is what USPAP says about evaluations. And then we're going to talk about the development of appraisals in USPAP. And for real property, we're talking about Standard 1. And then we're going to talk about what USPAP says as far as reporting. And again, for real property, we're talking about Standard 2 there. And then lastly, we are going to compare and contrast appraisal report requirements versus evaluation requirements. So with that, let's start at the beginning with what exactly is an evaluation, Wayne?
Well, first off, John, let's talk about what an appraisal is, because we like to distinguish between what an appraisal is versus what an evaluation is. We're not going to typically read these slides to you, but this is important, so we will read these definitions. So per FIREA and the Interagency Appraisal and Evaluation Guidelines, an appraisal is a written statement independently and impartially prepared by a qualified appraiser who is state licensed or certified, setting forth an opinion as to the market value of an adequately described property as of a specific date, supported by the presentation and analysis of relevant market information.
Fantastic. And now with that explanation of an appraisal, we can contrast that to what an evaluation is.
All right. And within the interagency guidelines, it also says that an evaluation is a valuation permitted by the agency's appraisal regulations for transactions that qualify for the appraisal threshold exemption, business loan exemption, or subsequent transaction exemption.
So that's, it's an interesting because we've referred to the Interagency Appraisal and Evaluation Guidelines. And so we've had a couple of questions about evaluations for personal property appraisals or for business valuation. And I guess it's worth just underscoring here that this term evaluation, this product is something specifically designed by the federal banking agencies for real property, right?
That's correct, John. Today we'll be exclusively talking about the use of evaluations in the context of FIREA and the interagency guidelines. So we won't be discussing business valuation or personal property valuation.
Great. So we've talked about what the distinction between an appraisal and an evaluation. Let's talk about when evaluations can be used, but maybe first we should talk about when appraisals are required.
That's right, John. Effectively, the way that the guidelines are structured, an evaluation can be used when an appraisal doesn't have to be used. So let's talk about when an appraisal has to be used. There are certain exemptions within the guidelines. However, most real estate related financial transactions over an appraisal threshold are considered federally related transactions, or FRTs, and thus they require appraisals.
Great, great. So understanding when an appraisal is required, we can now look at the converse side of that, when evaluations are allowed.
Right. When an evaluation is allowed. And interestingly here, it's important to note that the financial institution is going to decide when they believe an evaluation can be utilized here. So it's not going to be up to the appraiser or the evaluator to make this decision. But we're talking about real estate loans with a transaction value that's usually the loan amount at or below a threshold amount, which is currently $250,000. A business loan with a transaction value below a different threshold amount, which is $1 million, and extensions of credit subject to other criteria. Again, this is not up to you as the appraiser. If you're being contacted by a financial institution to determine, it's up to the institution to decide that they can obtain an evaluation.
Great. Great. Thank you for that, Wayne. So let's talk about then, before we talk about who can perform evaluations, let's talk about who can perform appraisals. Can you shed some light on that for us?
Sure. Well, within FIRREA, this is Title 11 of FIRREA, and these next couple of slides will reference FIRREA directly. A state certified appraiser is required for any federally related transaction having a value of $1 million or more. 1 to 4 single family residential or single unit residential appraisals can be performed by a state licensed appraiser under FIRREA, unless the size and complexity requires a state certified appraiser. There are some elements here that describe what it means for something to be considered complex. If you are a state certified appraiser, you can appraise any of the 1 to 4 unit single family residential. If you're state licensed, if it is a complex assignment, it may require the services of a state certified appraiser.
Great. And that definition of complex, again, what we're showing here on the screen is a direct citation from Title 11 federal law. And we've had questions in the past about, well, what does it mean to be complex? And as we see here on the screen, it talks about the property, the form of ownership, property characteristics, or market conditions being atypical. I guess one could argue that virtually every assignment may be considered atypical, but that's the definition we have to work with.
That's right. We're not going to answer that one here today, John.
All right. Very good. You alluded to state licensed appraisers. What transactions does the federal law say about state licensed appraisers?
Well, federal law, again, FIRREA section 1114 here indicates that any FRT that doesn't require a state certified appraiser can be performed by either a state certified appraiser or a licensed appraiser.
Okay, simple enough. And we talked about those amounts on the prior slide there.
Right.
Well, now we've talked about who can perform appraisals, so let's talk about who can perform evaluations.
Sure. Well, within the interagency guidelines, it says that the person who is selected must possess the requisite education, expertise, and experience to competently complete the assignment. Competently, we're bolding here because that's a term that's frequently used by appraisers and well known to appraisers. The second bullet point we have here is within the guidelines. However, it's really up to the financial institution. You as an appraiser are not going to make sure that the financial institution reviews you, but that is a requirement for them. And ultimately, the person selected, the appraiser or evaluator, is capable of rendering an unbiased opinion.
So you mentioned competency. We've talked about unbiased here. This is really an indication that we're probably going to see throughout the remainder of this webinar that there are more similarities than differences between appraisals and evaluations, wouldn't you say?
You're absolutely right, John.
Well, let's continue. The next bullet for what is required for who can perform an evaluation.
Right. And actually, this is a requirement for both appraisals and evaluations. The person who is selected to perform this work must be independent and can have no direct indirect, or prospective interest in the property or the transaction.
Okay, so we're going to, again, later in the webinar, we're going to compare and contrast. The evaluation requirement here talks about prospective interest, whereas technically under USPAP, an appraiser could perform an assignment with an interest if properly disclosed, assuming he or she would remain unbiased and prepare an objective appraisal. Now, the next bullet under evaluation requirements, they talk a little about licensing and certification here, but can you elaborate on that, Wayne?
Sure. The requirements are for the person selected, again, to do the work. If you're an appraiser, you have to have an appropriate state certification or license at the time of the assignment. And if you're doing an evaluation, you should possess the appropriate appraisal or collateral evaluation, education, expertise, and experience. Again, sounds a lot like competency to me. Interestingly here, it does specifically indicate that such persons who are performing evaluations may include appraisers as well as several other types of professionals.
Great. And we have an asterisk at the end of that slide, and that kind of continues over from what those guidelines say. And again, with following that pattern, that there's a lot more connected here between appraisals and evaluations. It does state that although not required, an institution may use a state licensed or certified appraiser. And here, in fact, to kind of underscore that relationship, the guidelines, the Interagency Appraisal and Evaluation Guidelines, specifically refer to Advisory Opinion 13 in USPAP for guidance on performing these. So we'll take a look at that here as we progress. Again, before we talk about what's required for an evaluation, let's start by talking about what's required for an appraisal.
Sure. Well, the list is fairly short. There are 5 items that are absolutely required. Appraisals must comply with USPAP. Appraisals must be written, and they must contain sufficient information so that the financial institution's decision to engage in the credit transaction is supported. They have to analyze and report appropriate deductions and discounts where necessary, such as on proposed or under construction properties, something that's not stabilized, or a property that is a sellout, a condominium or a single-family subdivision sellout. They have to be based on the agency's established definition of market value, and they have to be performed by state licensed or certified appraisers.
Great. And a couple things maybe to just highlight here. The second bullet talks about the first 2 words, be written. Some appraisers sometimes may get a little confused because USPAP does provide for oral appraisal reports. But as we can see here, if you're talking about an appraisal for the banking agencies, the Interagency Appraisal and Evaluation Guidelines do not permit an oral report. They require it to be written. Another thing that worth mentioning here is it talks about be based on the established definition of market value. And as you said, Wayne, that definition is found in the banking regulations. Sometimes there are appraisers who think that USPAP actually contains a definition of market value, when in fact it doesn't. What is in USPAP are the essential requirements for a definition of market value. So in other words, a how-to create a definition for market value. But as you said, the one used for these appraisals is found in the agency guidelines, and we'll probably talk about that towards the end.
I believe we will.
Great, thank you. All right, we've talked about what's required for evaluation, or for appraisals, excuse me. So now we want to talk about what's required for evaluations. So Wayne, what do we got here?
Well, first thing I think to note here is that this is content that will be in an evaluation report. So this is, if you will, the standard 2 portion of the expectation on an evaluation. What lives in the interagency guidelines doesn't really speak to development, although there are aspects of reporting that certainly would refer back to the development piece. So ultimately, an evaluation has to contain sufficient information detailing the analysis, assumptions, and conclusions. There's a list here of items that must be included at a minimum. an identification of the location of the property. Seems reasonable. It's real property. Want to know where it is. A description of the property and its current and projected use. The content of an evaluation must include an estimate of the property's market value. Comes up again, was required on the appraisal side, it's required on the evaluation side. In its actual physical condition, use, and zoning designation as of the date of the evaluation. I think we call that as is market value. It also requires that any limiting conditions be indicated here. Appraisers are fairly familiar with assumptions, limiting conditions. The evaluation must describe the methods the institution used to confirm the property's actual physical condition and the extent to which an inspection was performed. So that's interesting. In some cases, if either a bank associate, employee, is performing the evaluation, then it is incumbent upon the bank to describe the extent of the inspection. Clearly, if an outside appraiser or evaluator is doing so, they would disclose what level of inspection occurred.
Great. And for those of you that may be what we affectionately term as USPAP geeks like myself, you might notice that number 3 says provide an estimate of the property's market value, whereas USPAP uses the word opinion now. There is no distinction drawn between those two terms. There's not a reason that the evaluation says estimate and appraisal says opinion. That's just terminology. As you might recall, USPAP in the past used the word estimate and was revised, and the guidelines still say estimate. So there's no significance to that distinction, is my point. As we go on, a couple more items to talk about in the content for evaluations.
Certainly. The evaluation must describe the analysis that was performed and the supporting information that was used in valuing the property. In addition, it must describe the supplemental information that was considered if an analytical method or technological tool was utilized, some sort of AVM or other tool.
Discounted cash flow analysis.
Discounted cash flow analysis,
like
et cetera.
Great. And it goes on to talk about some specific requirements for the sources of information.
Right. There's a list here of, again, some items that are familiar to appraisers. External data sources that were used in the analysis, such as sales databases, public tax and land records, property-specific data, such as previous sales of the subject, might be an important thing to consider in rendering the results of an evaluation. The tax and assessment data, comparable sales, evidence of a property inspection. So if you, as the evaluator, have done a property inspection, you're going to talk about it here. You might actually include photos of the property, a description of the neighborhood in which the property is located, and also a description of local market conditions. Again, the similarities here to what lives in a typical appraisal assignment, to me, are fairly obvious.
And we mentioned here in the third bullet there, evidence of a property inspection, and as many of you know, USPAP does not even require an inspection of the property. There are assignments that are out there that are becoming more and more common, where an appraiser is asked to provide an opinion of value. It could be an evaluation where there is no inspection of the property, or an inspection may be performed by another individual, possibly a realtor, possibly someone else, and the appraiser is being asked to utilize the results of that inspection in their analysis. So inspection, some people aren't quite clear. Inspection is not mandated in USPAP, but it is something that the interagency appraisal and evaluation guidelines talk about.
And then the last item, I chuckle a little bit. Appraisers are human, so it does say that within an evaluation, if you're an appraiser doing an evaluation or a non-appraiser doing an evaluation, the evaluation content must include information on the preparer when an evaluation is performed by a person. So seeing as most appraisers are people, we're going to assume that they're going to include that information, their name and contact information, and a signature.
And we're assuming that our audience today does not consist of any non-persons.
Any non-persons of any sort, that's correct.
Okay, well, we've heard what the interagency guidelines say about evaluations, who can perform them, what the content requirements are. Let's talk about what USPAP says. We made a reference earlier to Advisory Opinion 13 that's found in those guidelines. Wayne, you want to highlight a few of the things here?
Certainly. Yeah, there are sections, and I would urge anyone who's an appraiser, who's considering completing evaluations to go take a look at Advisory Opinion 13. And in particular, you probably want to take a look at some items that'll be comforting, perhaps. It does say appraisers who are bound by USPAP must recognize that an evaluation meets the definition under USPAP of an appraisal, and therefore you do need to comply with USPAP. An appraiser who is required to comply with USPAP must meet both the agency's content requirements for an evaluation and the requirements of standards 1 and 2 and any other part of USPAP that is applicable. And then lastly, and this is the one I guess that's the bit of a bugaboo for some appraisers, if a client does not agree to an assignment that allows the appraiser to comply with USPAP and any other applicable law or regulation, the appraiser must decline or withdraw from the assignment. I know people view that as a stumbling block. I mean, to be quite honest, on an appraisal assignment, it's something not called an evaluation. If the client wants to limit the scope of work for use or the reporting format for use such that you cannot comply with USPAP and provide credible assignment results, you are also required to decline or withdraw from the assignment. So there's really no difference there.
That's a really good thing to underscore there. It's not specific to evaluations. No matter what an appraiser does, if they are unable to comply with law, regulations, or produce credible assignment results, they don't have a choice. They either have to decline or withdraw. The first two bullets also talk about appraisers who are bound by USPAP, and then the next one says an appraiser who is required to comply with USPAP. And it's worth mentioning here too that just to underscore these things, USPAP, as you read in the preamble, USPAP does not determine who or which assignments must comply. Those are issues that fall under state law, for example. As a state certified or licensed appraiser, you may have to comply with USPAP. There may be assignments. Some states have carved out some exemptions for assignments that do not require USPAP compliance. If you're a member of a professional appraiser organization and as a designated member, you may be required to comply with USPAP. So these USPAP, the requirements to comply with USPAP are not found inside USPAP. They are found outside USPAP. So just taking a moment to underscore that point there. All right, well, we've talked about what the guidance says in Advisory Opinion 13. As you mentioned, some of the things that we saw in what's required for an evaluation were more on the reporting side, with some on the development side. But before we get into that, let's talk about what USPAP says about developing an appraisal.
Well, John, USPAP does not currently include a specific predefined criteria to develop an appraisal or, by extension, an evaluation. The appraisal development is based on the scope of work performed in an assignment. In past versions of USPAP, I think those have been around for a little while. Remember terms like complete or limited or departure. The Standards Board has migrated away from those terms to give some more flexibility in developing the scope of work so that an appraiser and a client can work together to meet those needs.
Right. A lot of people sometimes say, well, why doesn't USPAP specifically tell me what I need to do? And the answer is there are a lot of people that say, thank goodness it doesn't tell me specifically what I have to do. It's intentionally has that flexibility so that appraisers can perform a variety of assignments. And the bottom line is, can the appraiser produce credible assignment results? So it doesn't say you have to complete steps 1 through 15. It says you have to complete the steps that are necessary to produce credible assignment results. And so you talked about the scope of work. Here's a definition.
Absolutely. It's the type and extent of research and analysis in an appraisal or an appraisal review assignment. And this, again, speaks to development. This is not the reporting side. This is what we do before we set pen to paper or finger to keyboard.
That's such an important point, that a lot of times appraisers who sit down and begin completing an appraisal report draw no distinction between the development and the reporting aspect of it. And again, scope of work, as Wayne just said, scope of work is exclusive to development, whereas reporting is handled separately. So standard one and scope of work separate. So when we look at this and we talk about what USPAP requires, what's the takeaway here, Wayne?
Well, the takeaway here, John, is similar to slide 2 or 3, where we said, effectively, yes, you can do it. There's nothing in USPAP that precludes an appraiser from performing a scope of work required to develop an opinion of value in an evaluation assignment.
So great. So appraisers out there that say, I don't know if I can do evaluations, here it is right in front of you. Yes, you can. And that is, we are talking about the development side of it. Now, there's a few things you're going to need to keep in mind as we go to the reporting side of it. And before we talk about evaluations, we're going to talk about what USPAP says. So, Wayne, what do we have here in Standard 2?
Well, Standard 2 in USPAP does offer 2 reporting options. There's an appraisal report, and then there is a restricted appraisal report.
Great. Now, primarily, people can look at Standards Rule 2-2 and the different requirements, but really they're not as different as people think.
No, the essential difference as noted here is the content and level of information provided. In many cases, the restricted appraisal report uses the word state, whereas an appraisal report uses the word summarize.
Great. And there's one other distinction there in the restricted appraisal reports, that currently USPAP does not allow for more additional intended users, but beyond that of the client at this point in time.
That's correct.
Well, now we see we've got Advisory Opinion 11 on the screen. What should people know about that?
Well, Advisory Opinion 11 is a place where folks can go to get a pretty good description and guidance regarding the differences in the level of detail. This is, again, reporting detail between an appraisal report and a restricted appraisal report. The advisory opinion also references some of the other standards for personal property and business valuation. But if we're talking strictly about the differences on real property, you'll find that in 2-2.
A very helpful chart there in Advisory Opinion 11 that will compare and contrast what the requirements are for reporting under Standard 2 in this case. Now we're going to move on to kind of the meat here. We're going to kind of go section by section here to some degree and compare and contrast what an appraisal report requires versus evaluation. Now, the thing I want to make sure we come across, that comes across to the audience here, is we're talking about these requirements are an appraisal report, not a restricted appraisal report. And I think as we'll go through this, you'll see that even an appraisal report isn't that different from an evaluation. It doesn't have to be a comparison between evaluation and restricted appraisal report, which requires less detail. In this comparison, you'll see we're talking about an appraisal report. And so we've got a chart here. We'll blow it up a little bit for everyone to read a little bit easier. But Wayne, you want to talk to us about the items that are required in an appraisal report and citations versus what an evaluation says?
Sure. So there's a lot of information on this page. So let's talk about what's here and what folks might refer to. So obviously, the far left is the item, as it were, the descriptive item as to what might be required in either an evaluation or an appraisal report. We've got our little check boxes, whether an evaluation requires this, whether an appraisal report requires this. And for everyone's reference, the far right, we do have the USPAP citation, which we'll talk a little bit about here. The other item I'd like to bring up, and you'll see it, we've got a couple of pages of these comparisons, is that the yellow shading identifies items that are required in an appraisal report, but don't necessarily live in that list of specific items to be included in evaluation. And the overarching item here, again, as we've been discussing for the last half hour or so, is that there are more similarities than differences. So the first two items, we talk about unbiased and independent and not having a prospective interest. That's required of someone performing an evaluation. It's required of someone who's completing an appraisal report. The USPAP citation is 2-3, and by gosh, that's the certification. So most appraisers are very familiar with having to indicate within their certification that they're not biased, that they don't have an interest when they're doing work for a financial institution. Although, as we do note, because this is the standards board and we do tend to like to have full disclosure, USPAP does allow at times an interest, just not for an FRT.
Beautiful.
The evaluation content requirements do not actually require the evaluator or appraiser to identify the client. Not a terribly burdensome thing. Presumably at the top, when you address your evaluation, you can note who the client is. And it does not require that the intended use be stated. There's a fairly narrow band typically for a financial institution as what the intended use might be. Might be financing, might be renewing financing, might be disposition of an asset if it happens to be owned by the institution. Fairly narrow, but again, not terribly burdensome for an appraiser to state what that intended use might be.
So we're looking at the first two items that are highlighted here that you just talked about that are required in an appraisal but not required in an evaluation, but kind of alluding to what you just mentioned. Those items may be 2 sentences.
That's correct.
So again, even though it's required in an appraisal and not required in an evaluation, again, to underscore what you said, not an overly burdensome requirement to have.
That's correct. Again, description of the property and its current and projected use is required in both. State the interest being appraised. In an evaluation, technically, you're not required to do so. We're typically talking about fee simple, leased fee, or leasehold. Might be a sandwich leasehold position if the institution has decided that that is not too complex for an evaluation. But clearly, if within the context of an evaluation, you are completing an income approach and the property is leased, whether you say it or not, you're doing a leased fee analysis. So indicating that your value is of a particular interest, again, not terribly burdensome.
And we have a highlight there for limiting conditions in the next one. Do you want to explain that a little bit?
We do. Well, this item deals with market value. And again, this is the agency's market value definition in its actual condition, use, and zoning. So as is, again, very familiar to appraisers. The indication here for an evaluation is with any limiting conditions. So if there are any limiting conditions of any sort, again, appraisers are typically used to having a standard set of limiting conditions or assumptions that go behind their analysis. We've highlighted that just to say, look, this is not that different from what an appraiser might include.
Right.
You're bopping around here a little, John, showing some people some other screens.
Yeah. Let's continue.
Well, and to an extent, we're going to talk a little bit later about extraordinary assumptions and limiting, hypothetical conditions, which we're going to stay away from hypothetical conditions in most FRTs. But some of these limiting conditions might rise to the level of being an extraordinary assumption. It's possible.
Very good.
All right. So we're going to describe also the methods used to confirm the property's physical condition and to the extent to which an inspection was performed. Again, from an appraiser's perspective, we're going to have that live over in our certification. Each certification requires the person signing that certification to disclose who inspected, who didn't inspect, etc. Describing the analysis that was performed and the supporting information that was used in valuing the property. John, this is why, and a couple of these where the word describe is used, is part of the reason that a restricted appraisal report would be difficult to utilize in this instance. Again, the end goal for your user, who is this financial institution, is for them to understand your development and reporting of the market value. So we're going to ask you to describe that analysis and the supporting information.
And that description is more akin to a summarization that you would find in an appraisal report than just stating as in a restricted.
That's true. The USPAP requires that the exclusion of any of the three typical approaches to value, sales, comparison, cost, or income, be made. So if I'm not going to include an income approach for some reason, I need to state within an appraisal report that the exclusion, why it's not necessarily necessary to produce credible assignment results, and why I'm using the approaches that I am using. So in an evaluation, again, typically a lower dollar transaction, it may be that only a single approach is necessary. If you're only performing a single approach within the confines of an evaluation and you're an appraiser, you do need to explain why you excluded some of the other approaches.
And again, as we everything that we've talked about here as far as the distinctions, that may not be a long drawn out process. If you're appraising a 75-year-old building, there may not need to be a real in-depth conversation about why the cost approach was not performed, for example.
That's correct. Or, the flip side, or, another example would be if it's a single family home in a subdivision of single family homes where none of those properties are rented, the property is not new. It may be that there's only one approach that's relevant, the sales comparison, and it would be fairly easy for an appraiser to describe why they didn't utilize cost and income.
So again, just to summarize this particular slide, we've seen and identified 4 differences between what's required in an evaluation and what's required in an appraisal report under USPAP. And all 4 of those could be done in a pretty succinct and brief manner. Let's continue on this comparison here. And again, we'll pull up the slide for a little easier viewing. Wayne, you want to talk about what we've got on this slide?
Sure. Again, as maybe we're a bit of a broken record, but I'm going to say it again, and that is more similarities than differences. Describing supplemental information. If an analytical tool or method was used, that's great. Yes, you have to do that in both an evaluation and appraisal report. Indicate sources of information used in the analysis. That was that laundry list of items that was listed a few slides back for what is required in the evaluation content, also required in an appraisal report. If an opinion of highest and best use was developed, summarize the support and rationale for that opinion. Technically, an evaluation, the evaluation guidelines do not speak to highest and best use. There's no line item that talks about highest and best use. However, the objective is to estimate market value. Market value in and of itself, and do we have the definition of market value?
I believe we do.
Oh, look at that. Market value has a few elements in there. We've got a buyer and seller who are well-informed, well-advised, acting in their own best interest. So buyer and seller are typically motivated. These are items that, in a roundabout way, speak to highest and best use. Clearly, if you have a small underutilized asset in a downtown location, if you only value the small underutilized asset as improved, you might not be valuing the market value without consideration of what the highest and best use would be. So, indicating briefly the necessity of developing an opinion of highest and best use, the support and rationale might take you a few sentences if you're an appraiser, but it will prove up to your intended user that you've considered these elements.
So without that specific requirement to summarize an opinion of highest and best use, what you're saying is to a large degree that's inherent because of the definition of market value.
Yeah, I would say so. Without getting too deep into this, hopefully the institution that is engaging your services to do an evaluation has considered the complexity of the assignment and has not handed you an extremely complex highest and best use analysis to be completed within an evaluation content.
Great. We've got another item here about extraordinary assumptions and hypothetical conditions. You said we'd get here, and here we are.
I predicted that we would get here, and here we are. That's right. Well, again, on the prior slide, and we did talk a little bit about limiting conditions as an element that must be contained within the evaluation content reporting. So that speaks a little bit to extraordinary assumptions, perhaps. In this case, appraisers are required to clearly and conspicuously state any extraordinary assumptions, hypothetical conditions, and indicate that their use might have affected the assignment results. The expectation, is for full disclosure here, essentially. And without going into a sermon on what the differences are between an extraordinary assumption and a hypothetical condition, I can say that you're probably not doing an evaluation that employs many hypothetical conditions.
Great.
The last item, again, an appraiser is going to have a signed certification that's going to evidence that they are human, and it's going to indicate the other elements of independence, lack of bias, the level of inspection, and indicate who they are.
Great. So again, and again, not to sound like the broken record that Wayne talked about, but essentially the gist of this webinar is, in fact, that there are more similarities than differences, and being able to produce an appraisal report that there's not a whole lot more required than what is already required in the guidelines for an evaluation. With that, we've got a little bit of time, and we thought we've got a couple of questions. What you'll see, first of all, up there on the screen is our contact information. We encourage you to reach out if you have any questions about either this webinar or about anything else that we might be able to assist you with. When the webinar is concluded, you will be taken to a survey, and not only do we want you to tell us what you thought about the survey, but we also want your ideas on topics and issues that you might think a webinar can be done in the future. And again, as a reminder, you'll be receiving a handout of this presentation as we discussed at the beginning. So with that, we've got a couple of questions that, that we want to try to address. Wayne, the first question says, what are the most prevalent problem areas you've seen valuation professionals get in this arena of performing evaluations, and why?
That's an interesting question, John. I don't know that there are terrible problems. There are a lot of considerations for an appraiser pursuing any sort of business. In this case, if they find that the client wishes them to utilize such a restricted format that such that the development and reporting will not allow them to meet USPAP, that could be certainly a problem because the interagency guidelines do discuss the possibility of someone else doing an inspection. Questions have arisen, if someone else is doing the inspection, then can I do an appraisal, or can I complete an evaluation that meets USPAP without having done that inspection myself? What am I relying upon? How can I do that? So those are the, I guess, problem areas that we've heard of or would foresee.
And it's interesting on that last point, talking about the inspection. The idea that many people have is, well, if I were able to perform such an assignment and relying on somebody else's inspection, that I would make sure to disclose that as significant real property appraisal assistance, which may be a very appropriate thing to do if that individual is an appraiser. Because as USPAP specifies, that significant real property appraisal assistance is only applies to appraisers, not to other individuals. So if, for example, in the case that Wayne just talked about, where you've got an assignment where someone else is performing an inspection, like I alluded to earlier, a realtor, for example, or a building inspector or someone else perform that inspection, you would not be able to disclose, it would not be permitted under USPAP to acknowledge significant real property appraisal assistance from that individual. Instead, you would certainly describe where you got that from, and you may very well want to employ an extraordinary assumption about such an inspection, especially if the individual is not an appraiser and you're not sure about their abilities or their expertise. You still have to have a reasonable basis to rely on their information. We've got another question here that, we've kind of touched on this a couple of times here in the presentation, but it says co-signing a valuation report would still be the same regarding compliance with USPAP standards. Wayne, you want to try to tackle that?
Sure. At the outset, we did talk about an appraisal, the definition of an appraisal, the definition of an evaluation, and then there's a term that floats around out there, valuation, and it's to an extent it's a European term. There are no appraisers, there are valuers in Europe. Also, business valuation, personal property valuation may use the term valuation and appraisal interchangeably. In this case, if I can paraphrase, if I co-sign an evaluation report here, would it still be the same as co-signing an appraisal report? So in this case, if you have gone through the steps we've outlined here, you've added to the evaluation presentation and you have met the requirements of standard 2, then yes, you're effectively signing an appraisal report.
And those same USPAP obligations would apply. Now that is, again, with the assumption, as we talked about earlier, that you are required to comply with USPAP or you choose to comply with USPAP on your own. We've got another question that says, are there any other names these types of assignments are being called other than evaluations? The person says they've been approached by companies and they've been talking about a desktop appraisal using their software and again, things like possibly another person doing the inspection. So Wayne, names other than evaluations, well, how do you want to?
Yeah, I don't know that they're, if you're being approached by a financial institution, chances are they're either asking you, because they have obligations, right, to have an appraisal and evaluation program within their institution. They're required to meet the requirements of FIREA and the agency to whom, who is their specific regulator. The likelihood is high that they're either coming to ask for an appraisal or they're coming to ask for an evaluation. There are a myriad of other products out there that we've heard of, and John, I think we've got some items in the works to describe and compare and contrast some of the automated products that are out there and help define that actually for some of the regulators. But at this point, if you're working within the confines, as it were, of USPAP, or trying to complete something in accordance with USPAP, you will need to be competent. You will need to perform competently. You will need to disclose your level of inspection. You will need to disclose information on how you understand the property to be in its current condition, or if it's a prospective analysis, its future condition. Whatever the source of this information, in addition, as both the evaluation and appraisal guidelines indicate, if you are using some sort of software or automated product, that you have to describe the use of that product and the results from that product.
And as we talked about earlier too, I mean, that term evaluations has a very specific meaning. It's those federal banking agencies that have established it to be something other than an appraisal. So are there other terms for things out there? There are probably a lot of other terms, but evaluations is intended to specifically address those assignments under the federal banking agencies, interagency appraisal and evaluation guidelines. There were a couple of questions that asked about, I guess for lack of a better term, the appropriateness of an evaluation versus an appraisal. And I think, we tried to talk early on. That's not what this webinar was designed to talk about. We're not either extolling the virtues of evaluations or condemning them. The purpose of this webinar was to be able to explain to appraisers how they can perform evaluations and comply with USPAP at the same time. And we hope that we've been able to achieve that goal. With that, Wayne, I would like to thank you for participating today and being such a great source of information. And would like to thank every one of you who have tuned in. We certainly appreciate your participation. Look for that survey after you log off of the webinar, and you will also be receiving a copy of the presentation via email. Again, thank you for attending, and I hope everyone has a great day.